What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm back in the positive with my dividend portfolio. And with my dividend investing strategy, there are some real estate investment trusts that I targeted. And I earned $250 and I went right after these REITs to buy. So REITs are high yield. The dividend growth may not be there completely, but they give you a good bang for your buck. But the one problem with REITs are if you make $500 in REITs, you have to report that as $500 in income. So that's the one thing that's a little bit of a negative with real estate investment trusts. So a lot of people put them in their IRAs. I really don't put REITs in IRAs. I really don't believe in VNQ and some is something to invest in. I'd rather invest in like VTI or VOO or SCHG for my growth portfolio, which this one's doing pretty well right now, and I'm up. And the thing is, when it comes to investing, I like raises. So the raises aren't there completely, but there's high yield in some of these REITs that I bought. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these REITs I've been buying right now. This is complete capitalization opportunity for me with Stag Industrial. Now, I was against them. And again, their quarterly financials are pretty good. It was up 10.82%. Now, they're not as big as Prologis. They'll never be as big as Prologis, but I really like where they're going with their strategy. Now they have a quarterly distribution versus monthly, and there's a lot of opportunities for Stag. So I'm going to jump to Stag real quick on their website. So they're a real estate investment trust that focuses on acquiring, developing, owning, and operating industrial properties throughout the United States. They target a specific property, and it's developed an investment strategy that helps investors find a powerful balance of income plus growth. So now they have 601 buildings. They're getting bigger and bigger and bigger. They're in 41 states. They've done really good with their funds for operations, and a lot of their facilities have very good occupancy rates. So each time I go on their website, every quarter or every year, I see more and more. It says number of buildings right here. I see an increase each time. That increased my confidence in them. And also the recent 4% dividend hike, and they changed to quarterly. So that really attracted me to buying them, because here's why. And look at how slow this dividend growth was. You got 2017, 12 cents, 2018, stuck at 12. And then they made the announcement. So they were at 2024, 2025, 2026. They went to 39 cents. So they switched to quarterly. They had a dividend hike announcement. And that was one thing that really impressed me with their dividend hike. I was really impressed with the big guns that they put in, and they developed their strategy. So I think the more buildings they have, the more acquisitions, the funds for operations are really going to start sticking in. And they're doing the exact opposite of what Agree Realty Corporation is doing. Remember, Agree Realty Corporation went from quarterly to monthly. These guys are now monthly to quarterly. So this is one thing that has my attention. This has me wanting to buy more, and this had me buy shares of Stag with my passive income. So that's one thing that I looked at. They're well diversified. They're an industrial REIT, and this one's just as good, and I got some shares of them. This one gives you a good bang for your buck as well, and this is why I have been buying them for a long time. NNN REIT, they're sitting at 43.55. They have not jumped up significantly in the past 5 years, so that attracts me. They have a dividend yield of 5.46%. Their quarterly financials and their revenue was up 9.12% year-to-year revenue. So that's one thing that is very impressive. I like that. I like the trends with the revenue, and I'm going to jump to their portfolio. So this is really nice. They're in 50 states. They have 3,697 properties. And again, numerous videos I've posted with the arms race and automobile right here, automotive service, okay? Car wash, automotive service, car wash. You got convenience stores, you got 8% restaurant, you got 7.2% entertainment, 6.6% dealerships. They have over 400 tenants. Their top 20 tenants are 7-Eleven, Mr. Car Wash, arms race right there. As I said before, Dave & Buster's, Camping World, GPM Investments, AMC Theaters, but I think that'll change eventually. LA Fitness, they've been doing really well. We got BJ's Wholesale Club, and Chuck E. Cheese is a little bit of a surprise. Walgreens is still holding up. Now, they may not be doing well with their dividend, but they're still paying rent and they're still making revenue. They're just not to where they were. The other one that I really like is the Superstar Car Wash. There we go. And Tidal Wave Auto Spa. Like I said, the arms race, Bob Evans Restaurants, 1.2%. So they have a lot of nice things. Because of that, they also have a pretty good occupancy rate that is very high. They have a 97.5% occupancy rate. So that's one thing that's very attractive. And again, their funds for operation are very good because you have a high occupancy rate and you have a very good distribution, which I'll jump to, with a high yield. So I'll start in 2019, 50 cents to 52 cents. A little stagnant during the pandemic. Then you get 53 cents in 2022, and then 55 cents. And then in 2023, 2024, 57, 58 cents. And they just cracked 60 cents. So yes, you'll see a high payout ratio, but again, 90% of what they make have to go back to investors. The number of dividend increases the last 5 years is 5. Dividend growth in 5 years is 3.03%. Again, high yield, you're not going to get a high dividend growth. And if you bought one share, you made $5. I'm sorry, if you bought one share, you made $2.40 with a 5.55% dividend yield. And again, that distribution, 58 to 60 cents. That is a pretty good deal. And I'm going to jump back to the price. Really good distribution. So that's one thing that's quite attractive with that. So I wanted to go over these two. This is what I've been buying for my dividend investing strategy in REITs. I've been mixing up my YouTube channel a little bit. I think because of my job, it's been really tedious. Again, there are opportunities coming up for a new job. I'm very excited for that. People are hitting me up like crazy. You know, the jobs that I wanted as a new grad nurse, all of a sudden the recruiters are hitting me up like crazy. So it's nice to have options. It's also nice to have options with your stocks that you buy. So I hope you enjoyed this YouTube video. And again, if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. My content is free for you. Take care and have a good one. And again, don't use this YouTube channel for financial advice or tax advice. I got a disclaimer at the beginning of the video. Take care. Have a really good Dividend Warrior Wednesday.